starting with Capitec. It's a full retail bank with over 6.2 million retail customers. Results out this morning.
Exactly. This one should actually be mentioned amongst the big five because 6.2 million customers is more than enough to be considered in the first division. But look, this one, established in 2001 by the team over at PSG, Michiel Leroux and his colleagues, Yanni Mouton's involved, Chris Otto's involved, comes to the market at a terrible time for small banks in 2002 when Sambo had just collapsed. Absolute rocket. One of the most successful companies on the market in recent years.
Market cap, 54.8 billion rand, price to earnings ratio of 24.6 and a dividend yield of nearly 1.5%. The big question, how does Capitec remain unscathed when you see a situation like the implosion of its competitor, African Bank?
Well, I think we've got to look at its business model. It's fundamentally different. They don't rely solely on loans. And in fact, if you look at the recent results, what they've said is almost 17% of South Africans consider Capitec as their primary bank. So that's a bank, transactional banking. So they have a much stronger relationship. It's not just they've lent the money sort of speculatively in the hope they'll get it paid back. They see the salaries getting paid into that bank account. They have a much better relationship and understanding with their customer. And I think their customer obviously treats them appropriately in terms of funding, servicing the loans and using the bank on a transactional basis. The transactional fee income was up 35% in those sets of results, which just shows you how robust the underlying business model is.
Interesting change I've seen in their advertising strategy on the DStv platform. You're seeing a number of Capitec ads, and traditionally that wouldn't be their target market. So they seem to be now servicing the entire LSM.
So they position themselves as a kind of new, young bank without the technology-based snafus that the older banks do, better internet sites, faster loan approvals, quicker card issuances, better-looking branches, all that kind of thing. So that has been to their credit. 6.2 million customers, super. And the deposits are clear there. So you've got about 20 billion rands worth of call deposits. That just mean, cash in current accounts. And you've got another 10 billion odds worth of term deposits. That's where people put it on like 32-day notice. And then you've got other funding. So you've got a massive funding base at a relatively low cost for Capitec. Meanwhile, back in the States, they've been doing the loans, not too aggressive. Some bad debt provisions, 4 billion in the period, not nothing, but enough for the market not to be concerned. So this goes away from being perceived as a small loan, unsecured, chop shop type, flop house, to being a mainstream financial services
Yes, but
player.
now talk about the investment case for the stock that is trading at current levels.
What a good-looking share
Rowan?
price.
So, would you put more money, new money, into Capitec right now?
Look, I think what you're seeing is it now being priced as a growth stock. They came out with 26% HEPS growth and a very strong trajectory. So you could argue that a PE of around 20 is justified given that the expectation of the growth will continue. And I think people see it, the market's seeing it as sustainable growth, well balanced, as Paul has mentioned. They've got full service banking, deposit base, very strong business model. They have a low sort of cost branch network, 35% cost income ratio, 25% return on equity. All of these factors stack up to a very attractive business and robust business model.
Well, it sounds like good things are coming out of Capitec, and moving forward that success is going to be continued.
Look, they don't have any aspirations to be involved with merchant banking, institutional banking, corporate banking, that kind of thing. They say they're going to focus on retail. I'd like to see them get bigger in motor vehicle and asset finance and bigger in mortgages, because those are obvious bolt-ons, larger loans to better quality customers, particularly, as you say, if they're fishing for business in the mainstream environment. So they're going to do branch expansions in areas with better heeled customers. So I think that's the future for them. But given their track record, Fourie and his colleagues are probably going to be as successful here as they've been
Hot
elsewhere.
or not, Rowan?
Hot.
Hot or not?
Yeah, it's always a bit of a call when you see a share price like that and you feel, well, look, a bit of a Johnny come lately to call it hot now. We have been cautious in the past, but for me, it's got the momentum, it's got the plan, it's got the team, so I'm going to go with hot.